got so many questions for him. Because, again, the more you ask, the more you want to know. Can I ask him?
Yeah, fire away a couple, and then we get Larry back in,
Because
too.
we were talking about FICO score. That's the end-all, be-all for qualifying for a mortgage. What else, though, are the lenders looking at these days that they might not have? Is it your job security?
And let me interrupt there. Let me tie it to a question that we have here, Dagan, because we actually had a question from Gus that wrote in and said, my credit score is 814.
Yep.
I just completed my third request for a refi in the Yuma market. Where can I get a best list of out-of-state refi companies and their rates? Where can I look if I have a credit score? And is that really the only thing they're going to be looking at with Gus, as Dagan mentioned?
There are 4 criteria that lenders look at. Collateral, credit, capacity, and character. Collateral is the first and foremost. That is the value of the property against the mortgage balance to see if there's enough equity to work with to be able to help the borrower. That's the first thing. One of the things that consumers can do today to really help themselves a lot is know what your property value is worth, not based on what you think it should be worth, but what actual homes are selling for like yours, so that when you go into that, you have a good idea about that. There's sites like Cyber Homes and Zillow is another one where you can check. Now, they're not completely accurate, but at least they'll give you an idea. You can, and if you take that and talk to a local realtor, you get a better handle on that. So first is having that equity. Second is making sure that your credit is okay. FICO scores are still very important. It used to be that, 2 years ago, almost regardless of your FICO score, if you had enough equity, you could get a loan. Today, you have to be pretty much over 620 in most cases. 580 to 620, there are still some programs out there. Below 580 is where it really is difficult right now, which is unfortunate for consumers today, but that's where we're at right now until we see some changes. Capacity on your job is critical. You have to have verifiable income, and you have to make sure that it's steady income. They're going to ask you a lot of questions about that. If you take those factors, those all add up to the character piece, which is the long-term stability of what that borrower can do. So that's what a lender is going to look at. The more prepared we are as consumers in going into that mortgage transaction, the more successful we're going to be in getting that refinance. The less prepared you are, the more scrutiny you're going to fall under, and the less likeliness of getting approved.